Recently, China's renowned internet giant Alibaba Group made headlines with the news of a massive layoff, planning to cut 25,000 jobs, shaking the entire industry. Following this, a laid-off employee shared his story online, using the phrase, "I cannot accept this," 5 times to express his desolate feelings. On the first day of not having to work after being laid off, I felt completely lost. Looking at the uninstalled Ali Lang and Ali Ding, I can't say I'm too attached. But there's a sense of reluctance. Why me? Why, despite all my hard work, is it still me? Why haven't I achieved much in these years? I just can't accept it. After the layoff news broke, internet users reported that some of Alibaba's apps failed to function properly the day after the Double 11 shopping event. While these issues were technically related, they likely stemmed from Alibaba's cost-cutting measures, which involved laying off some technical elites, leading to widespread dissatisfaction among employees. It was recently revealed that Alibaba abruptly laid off 25% of its workforce, and now it's hitting me like a bolt of lightning. From what I understand, the reason Alibaba Cloud collapsed is that the employees capable of maintaining cloud stability, mostly around 35 years old and at P5 to P7 levels, they're all laid off. Though these people are experienced, getting rid of them seemed like the best way to cut costs and increase efficiency. But our corporate bosses should think beyond just making more money for themselves. They already have enough. I hope they can show some real leadership responsibility. Amid growing public outcry, Alibaba quickly issued a clarification on the evening of November 19th, denying the rumors of the impending layoff of 25,000 employees. Alibaba Group's PR head Yang Qiao also dispelled these rumors on WeChat. Reports even suggest that Alibaba reported the rumor to the police. However, netizens remain skeptical. Some netizens argue that such news doesn't emerge without basis, suggesting that Alibaba might not lay off so many at once, but rather in phases. Others speculate that while the company denies laying off 25,000, the actual number might be as high as 35,000. In light of public skepticism, commentators note that this isn't surprising given the evidence. Alibaba's financial report for the second quarter of fiscal year 2024, released on November 16th, showed a reduction of almost 15,000 employees by September 30th. Previous data reveals that in 2022, Alibaba reduced its workforce by about 19,500 and by about 7,200 in 2021. Over the past 3 years, the number of layoffs at Alibaba has visibly increased. Notably, this isn't the first instance of mass layoffs. On March 28th this year, Alibaba announced a major restructuring, splitting its $222 billion digital empire into 6 business segments and multiple operating companies, each seeking independent financing and considering IPOs. If successful, Alibaba Cloud is set to be fully separated and listed within the next 12 months. This marks the most significant organizational restructuring since the company's inception 24 years ago. Following on from that, the news of Alibaba's mass layoffs began circulating in late May. Rumors suggested a 20% staff reduction, with 7% in Alibaba Cloud. On May 23rd, the Chinese media outlet Southern Metropolis Daily reported intense layoffs in Hangzhou, indicating a tough job market. The recruitment company leaked the news that it was Alibaba. Chinese media Time Finance also reported that departures were frequent at Alibaba's Hangzhou campus. An employee described 2 major shakeups in her department since 2022, gradually accepting the normalization of layoffs. In some cases, staff often had 2 farewell meals in a single day. It doesn't seem like a big deal anymore. Internal sources revealed that Alibaba's layoffs primarily targeted vice president level employees, with lower level staff also affected. Dismissed employees were given 1 month's notice. Despite this, most chose to leave immediately, receiving a dignified severance of N+3. Here, N represents the years of service, and +3 the additional 1 month's compensation for each year worked, capped at 3 months' salary. This storm-like layoff was described as swift in both its arrival and departure. On May 25th, Alibaba declared that reports of the company's layoffs were rumors and announced plans to hire 15,000 new employees this year. However, commentators have noted the similarity between this statement and Alibaba's past responses to similar layoff news, raising questions about the real extent of internal turmoil at Alibaba. This has led to increasing curiosity about the challenges Alibaba has faced in recent years. Reports suggest that the Chinese Communist Party government is a major factor behind Alibaba's troubles. The turning point for Alibaba and its founder, Jack Ma, came in October 2020, when Ma's public criticism of the CCP's regulatory bodies led to a series of clampdowns by the authorities. The government not only halted the IPO of Alibaba's Ant Group, but also launched an antitrust investigation against Alibaba, resulting in a record fine of 18 billion yuan on April 10th. The Financial Times reported that Alibaba's restructuring into 6 departments is an attempt to appease investors and Beijing bureaucrats. This move, along with the recent layoffs, suggests that it's more about private enterprises supporting the CCP rather than the other way around. Experts believe that the CCP government has not abandoned its intent to curb the dominance of tech giants and limit their influence. The concern is that data concentration in a few tech companies might weaken government control. Alibaba's extensive business operations make it a natural target for Beijing's crackdown. Moreover, China's most famous entrepreneur, Jack Ma's absence from the public eye in recent years is seen as reflecting the gloomy outlook for private enterprises in China. Whether or not he returns to China is viewed as a significant indicator of the favorability of the business climate. Reuters analyzed that if Jack Ma returns to China, it might alleviate some of the CCP's concerns, especially as the government tries to revive an economy battered by 3 years of zero-COVID policies. Ma's public appearance could signal the government's softer approach towards private enterprises. But other analysts argue that even if Ma, defeated by the CCP, returns to China, it might not boost confidence in private business. According to Bloomberg News, Alibaba has reiterated its commitment to reducing operating costs and boosting profits. This conservative shift for Alibaba, who once aggressively expanded into various economic sectors, reflects the reality of its growth stalling since Xi Jinping's crackdown on the internet sector in 2020. Lu Yuanxing, a former marketing executive at a Chinese company and now a political and economic analyst in the US, believes that economic factors are also key to the layoff trend. He cites Jack Ma's lack of confidence in China's economic future. This belief is backed by the November 16th disclosure on the U.S. Securities and Exchange Commission website, which showed that the Ma family's trusts, JC Properties Limited and JSP Investment Limited, planned to sell 5 million shares each of Alibaba's founder stocks on November 21st. Based on Alibaba's share price of $87.07 on November 15th, this sale would involve a market value of $870.7 million. Following this, Alibaba's stock prices in both the US and Hong Kong markets plummeted. On November 16th, Alibaba's American Depositary Receipt (ADR) fell by 9%, closing at $79.11 in Beijing time on November 17th, a 9.14% drop and its lowest since May. On the same day, Alibaba's Hong Kong shares opened sharply lower, dropping over 10% and closing at 73.25 Hong Kong dollars, a 9.96% fall, with a trading volume of over 14.1 billion Hong Kong dollars, leading the Hong Kong stock market. This could be Alibaba's biggest single-day drop in over a year, erasing about $20 billion in market value. Lu Yuanxing suggests that the shrinking market size and declining purchasing power of consumers in China are affecting all industries. For those with assets, liquidating stock holdings and holding cash is a relatively prudent approach. In addition, Lu Yuanxing pointed out that Jack Ma clearly recognizes that in China, being wealthy means being a target for the authorities of the CCP, who seek to extract resources from them. Lu stated that the CCP, facing financial constraints, is resorting to various means to generate revenue from different sectors, with wealthy individuals being the primary subjects of this financial harvesting. As a result, Jack Ma is actively trying to distance himself from his previous ventures, effectively entering a state of retirement. Furthermore, experts have added that the crackdown on private sector giants in China has become a significant trend, particularly in the aftermath of the COVID-19 pandemic. Reports indicate that not only Alibaba, but also internet giants like Tencent and e-commerce platform JD.com have announced layoffs. Financial Insight, a finance news YouTube channel, previously analyzed this phenomenon, suggesting that when Alibaba initiates layoffs, other internet companies and giants like Tencent and JD.com tend to follow suit, often with more significant workforce reductions. This approach also faces less moral resistance and pushback because Alibaba sets a precedent. Therefore, the demonstrative effect of Alibaba's layoffs should not be underestimated. Financial Insight noted that this wave of layoffs is gaining momentum because the CCP's zero-COVID policy over the past 3 years has inflicted significant damage on China's core businesses, severely affecting their financial health. They stated, after 3 years, they simply cannot go on anymore, so they have to reduce costs through layoffs to ensure their survival. On the other hand, it is essential to highlight that this wave of layoffs will have a ripple effect on housing prices and consumer behavior. Financial Insight pointed out that Alibaba's layoffs symbolize the end of China's internet golden age, and the chain reaction it triggers will have a massive impact on both consumer spending and housing prices. Currently, Alibaba's severance packages are not low, but many employees remain dissatisfied because they have purchased expensive homes with high monthly mortgage payments that they can no longer afford. Some netizens have posted that housing prices in Hangzhou, where Alibaba's headquarters are located, have experienced a significant decline. Recently, a listing for a property in the future Joy Max development by Sunac sold for as low as 35,000 yuan per square meter, which is close to a 50% reduction from the original purchase price of 65,000 yuan per square meter. Regarding this, Financial Insight pointed out that over the past few years, housing prices in Hangzhou had soared, creating a significant bubble. The high incomes of Alibaba employees also contributed to the inflated housing prices in the city. However, with the wave of layoffs, the entire Hangzhou property market has essentially collapsed. If this trend of layoffs continues to escalate, housing prices in various regions are likely to plummet one after another. Currently, China's employment situation is unfavorable, consumer spending is weak, and the property market is gloomy. With the added uncertainty of layoffs, people will have lower income expectations and reduced willingness to spend or invest, which could have a cascading effect on various aspects of the economy. He further stated that with Alibaba's significant layoffs, a wave of job cuts across China is expected to intensify, as many companies will be compelled to engage in downsizing efforts to ensure their own survival. Consequently, China's economy has plunged into a severe winter, and in the coming months, it may deteriorate further, prompting these enterprises to implement layoffs more urgently. However, this escalation of unemployment is sure to have a profound impact, affecting China's consumption, real estate market, and banking sector, among others. On the other hand, as previously mentioned by analyst Lu Yuanxing, the economic challenges in China are causing a collective shrinkage of wealth among Chinese billionaires. This was evident in the release of the Hurun China Rich List for 2023 by Hurun Research Institute on October 24, 2023. According to the data, as of September 1, 2023, there were 30 individuals in China with fortunes exceeding 100 billion yuan, 628 with assets over 10 billion yuan, and 1,241 entrepreneurs with personal wealth exceeding 5 billion yuan. In contrast, in the 2020 Rich List, as of August 28, 2020, there were 41 individuals in China with fortunes exceeding 100 billion, 620 with assets over 10 billion, and 1,171 entrepreneurs exceeding 5 billion. A comparison of the two lists reveals that although the number of billionaires with fortunes exceeding 5 billion and 10 billion has increased in 2023 when compared to 2020, the number of 100 billion yuan level billionaires has significantly decreased. For instance, in 2020, Jack Ma was briefly China's richest individual with a fortune of 400 billion yuan, approximately 55.4 billion US dollars. However, by 2023, his personal wealth had decreased by 230 billion yuan, approximately 31.8 billion US dollars, representing a decline of approximately 57.5%. He ranked 10th on the 2023 rich list. Tencent's founder Ma Huateng had a fortune of 390 billion yuan, approximately 54 billion US dollars in 2020, ranking second. In 2023, while he retained his second place position, his wealth had fallen to 280 billion yuan, around 38.8 billion US dollars.